Have you ever wondered how Bitcoin ETFs could potentially impact the crypto market? Let's dive in. Bitcoin ETFs, or exchange-traded funds, are financial products that track the price of Bitcoin and trade on traditional market exchanges. They offer a way for investors to gain exposure to Bitcoin without actually owning the cryptocurrency itself. Now, why is this important? Well, it's all about accessibility and liquidity. Bitcoin ETFs can open the doors to a wider pool of investors who may not have ventured into the crypto world otherwise. Now, let's turn our gaze towards Hong Kong, where the potential approval of the first spot Bitcoin ETFs is on the horizon. This could be a game changer. The Securities Regulatory Commission of Hong Kong is reportedly fast-tracking the approval process for 4 spot Bitcoin ETFs. This could attract buying demand from not just retail investors, but institutional investors too, thus bringing in a new wave of capital into the market. This upcoming approval could act as a catalyst for Bitcoin's post-halving rally. Stay tuned as we explore this fascinating dynamic further in our next segment. Let's delve deeper into the role of mega whales in this scenario. Mega whales, individuals or entities holding over 10,000 Bitcoins, are pivotal players in the crypto realm. Their actions can significantly influence the market, and their current behavior is noteworthy. They've been accumulating, increasing their Bitcoin holdings in anticipation of a significant event. But why now? The Securities Regulatory Commission of Hong Kong is potentially on the brink of approving the first spot Bitcoin ETFs, a move that could attract substantial buying demand from both retail and institutional investors. The approval of these ETFs is seen as a catalyst for Bitcoin's post-halving rally, sparking increased institutional demand. The mega whales are watching, and they're betting on this. They see this as an opportune time to invest, likely predicting that the influx of new investments will drive up the price of Bitcoin. Their actions are strategic, calculated, and could have a profound impact on the market. The actions of these mega whales could significantly influence the overall market. Now, let's explore the link between Bitcoin's price action and net Bitcoin ETF inflows. It's no secret that ETF inflows have played a significant role in propelling Bitcoin's price rally. In fact, when Bitcoin surpassed the $50,000 mark, about 75% of new investments were attributable to these inflows. Now, you might be wondering, what exactly are these inflows and why are they so important? Well, in simple terms, an inflow occurs when more capital is being invested into an ETF than is being withdrawn. This surge in investment naturally drives the price of the underlying asset, in this case, Bitcoin, upwards. But the story doesn't end there. The relationship between Bitcoin's price and ETF inflows isn't just a one-off occurrence. It's a strong, ongoing correlation. As more investments flow into Bitcoin ETFs, the price of Bitcoin climbs. Conversely, when investments decrease or when there are outflows, we see a corresponding drop in Bitcoin's price. This correlation is not just coincidental, it's driven by market sentiment and investor behavior. When investors are bullish about Bitcoin's prospects, they invest more in Bitcoin ETFs, which in turn drives up the price. When they're bearish, the opposite happens. So what's the takeaway? Well, it's simple. The ETF market isn't just a bystander in the world of Bitcoin. It's an active player, shaping and influencing Bitcoin's price trajectory in significant ways. Clearly, the inflows and outflows of Bitcoin ETFs have a significant bearing on Bitcoin's price. So, what does this mean for the future of Bitcoin and the crypto market at large? As we stand on the precipice of a potential Bitcoin ETF approval in Hong Kong, the implications are far-reaching. The expected uptick in institutional demand is a game changer. Remember, institutions bring with them a level of stability that can help mitigate the notorious volatility of the crypto market. This could provide a more enticing environment for the cautious investor, thus broadening the appeal of Bitcoin. And let's not forget about retail investors. The creation of Bitcoin ETFs provides a more accessible pathway for retail investors to dip their toes into the Bitcoin pool. You see, ETFs offer a way to invest in Bitcoin without the need to understand the intricacies of buying and storing the cryptocurrency itself. Essentially, they make Bitcoin more palatable to the average investor. Looking at the bigger picture, the approval of Bitcoin ETFs could catalyze a democratization of cryptocurrency investment. By simplifying the process and widening the audience, we're likely to see an increase in overall market liquidity. And with more liquidity comes the potential for more robust price discovery. This anticipated influx of both institutional and retail buying demand could significantly shape the trajectory of Bitcoin and the broader crypto market. In essence, Bitcoin ETFs could well be the catalyst that propels cryptocurrency into the mainstream. As we look to the future, the role of Bitcoin ETFs in shaping the market cannot be overstated. There's definitely a lot to look forward to in the world of Bitcoin, and this is an exciting chapter in the cryptocurrency saga.